In this video, I'll give you my way of trading order blocks after 5 years of experience. This video will be a full course going over a full strategy step by step on how to trade order blocks like a pro. So, in advance and not to waste anyone's time, these are some of the main topics I'll cover in this video. We're going to go over what is an order block, and then we're going to cover also the concepts of continuation and rejection, because that is going to be related to order blocks and the formation of it. We're going to be also talking about high probability order blocks, as well as after those 5 years of experience, I do have some types of order blocks to look for, and I only trade those types, and they're going to be 2 types. Okay, so we're going to be talking about those, and then entry confirmation. So after identifying the order block, what are the steps for the entry confirmation? And then the trade management, that's going to include the stop loss and the take profit and when to go break even, as well as the strategy step by step. So we're going to be going over the checklist and then finishing up the video with examples. Those examples are going to be also step by step, so we ensure the understanding of the whole concept and the full setup. So this is Mulham Trading, and let's begin with the video. Now, when it comes to order blocks and the definition of it, there are different ways of understanding order blocks, and it's totally okay to have one concept and different way of understanding that concepts and applying that concept. That's how you succeed, especially at trading. You take something, you improve it, maybe adjust on it, and it's totally okay to be different. So when it comes to order block, you see those 2 formations here, one here and the second one here. That is what an order block is based on 2 points of view. So some people would consider an order block, and I'll tell you which one I prefer after going over the 2. So some people would look for a formation of an order block, and the process of creating an order block is this one. We have a bullish candle going up and then bearish candle engulfing this last previous candle. Some people would consider now this as an order block, and this is the opposite here. Now, some people will do something different, and they don't say that we look for the last bullish or bearish candle and then the engulfing. No, we look for the last consecutive bullish candle, for example. So you see how we have bearish candle and then 3 bullish candles. In order to create an order block, we look for the engulfing and the closure below the last, those 3 consecutive bullish candles. That is the creation of an order block. And you pick the one you want. However, the one that I go with is this one. And you might ask me why, even though sometimes ICT says that this is the one. This is actually the changes say delivery, but actually after those years, this is the one that I trade, and this is the one that I make money off. And I'll show you in the examples how you can actually take advantage of this. This is the creation of an order block. And where can we see it? Actually, if we look at this, let's assume that this is a price action and this is a line going up. You will see that creation of order blocks comes at the pullbacks and where we switch the direction. So what does that mean? You see how here we come at this point and then we start going lower and we pull back lower. The start of this pullback is an order block here. Now, regardless if it's valid or not, but there is an order block here, as well as you see how we pull back here and then we are done with a pullback and going higher. There's also another order block here, order block here, order block here. So at any pullback, there is an order block, but that does not mean that all of those order blocks are valid. We have some rules to apply later. There are some steps that we need to look for in order to validate the order blocks. Now, the definition, and this is my definition on order blocks, and the one I go with is, it is the last bullish candle before the bearish move, and it is the last bearish candle before the bullish move. I look for the last one and not the last consecutive ones. And again, I want to repeat this because I don't want you to think about this just as a pattern that happens everywhere. No, we have some criteria to follow in order to validate this one. We can see this candle pattern happening a lot of times, but it's not always valid. Now, when we think about order blocks, we need to think also about one thing, is that why they hold. What is the reason that those order blocks hold the price higher? One of the ways looking at this is thinking about the continuation versus rejection rule. Based on this rule, we say that when we have a closure above a candle, high or low, then we look for a continuation. If we fail to close above or below the previous candle, high or low, that means we might have a reversal or at least a pullback. This is the rule. So here you see continuation when we close above, and this is the rejection. Forgetting about this for now and focusing on this. What do you see? So let's say we are going lower and we have a bearish candle, but we close above it. Why is this a change of state delivery first, and why is it a creation of an order block? Because in the next candle, and also based on the CCT, the candle continuity theory, it says that we have this bullish candle. Most likely we're going to have another bullish candle as a continuation, especially when we have the CISD happening here. Now, you see here, this is our order block. We can look for continuation to the upside, and next candle will be most likely a bullish one. Why? Because this is a bullish candle. It means the probability of next candle to be bullish is higher now. So this is one way of looking at order blocks and why they hold, because we have a bullish candle, we're expecting the next one to be a bullish candle also, and because we close above the previous candle high, we look also for continuation higher. We look for another closure to the upside. We're not going to be using the rejection or the reversal for order blocks. We're looking for the continuation. That is, you see the closure here equals the continuation. The closure is going to be used to validate the change of state delivery, which is also the order block. Now, as I said, we're not looking for any candle formation, the engulfing candle. We're not looking for that anywhere in the price action. However, we're looking for that specific pattern. You can call it pattern because at the end it is pattern, but we have some other confluences to mix it with to only focus on the high probability ones. So the steps for high probability order blocks, and it's not limited to this. So if you have your own way of identifying or differentiating between the lower and higher probability, then you can go with. But my way is those 4 main points. If you apply those, you'll end up with a high probability order block. The first one would be the time. Now, an order block that is happening at the end of the day, it's not going to be as high probability as one that is happening in the New York kill zone, as an example. The one in your kill zone is more likely to hold price and to establish an expansion, unlike the one that is happening at the end of the day that is going to maybe most likely price will range around that order block and maybe take it and maybe not respect it. It's not going to be again a high probability one. We need to focus on kill zones when it comes to order blocks. So 2 to 5 and 7 to 10. London and New York, those are the kill zones that most likely want to focus on order blocks formations around those times. Now, another thing that will actually give you high probability order blocks is looking for a liquidity sweep that happened prior to the creation of an order block. Now, if you don't have a liquidity sweep and you have failure swings, there's also a probability that price could respect that order block. But there is one thing that you need to look for. Was there an SMT? If there is an SMT, that could be valid. If not, then stay away from that order block. Why? Because if it does not have the other confluences, most likely it's engineering of liquidity. So there's a lot of liquidity still below that order block, and there's going to be trap to take that order block and take the low of it and then maybe go higher, or take the high of it and then go lower. So it's going to be a trap and not a high probability order block. So either liquidity sweep or SMT. You see liquidity sweep, and maybe if you have failure swing, if there is an SMT here, then we can take it. If not, ignore this, because what's going to happen is taking that major order block here, taking the low of it. Why? Because we have a buildup of liquidity. If we have SMT, then that does not apply. Now, also another one is a valid point of interest. An order block should not be traded anywhere. We need to have a point of interest that the order block is created at. An example of a point of interest could be another order block. So we could have an order block here. You see this one here. Price come back to it, create another order block. We could trade the other order block. And that's going to be respecting the order flow. Another point of interest also is a fair value gap. So if we have this creation of an order block or changes to delivery at a fair value gap, so let's assume this is the fair value gap here, and we get this creation of an order block, then this becomes a high probability one to trade off. Another one is a breaker block, and a breaker block is related, and it's actually the creation of a breaker block, and the breaking above a breaker block is how we identify market structure. If we look at the market structure, and that is the last point here in order to identify a high probability order block, we look for a high here, and a lot of the time this will be also a breaker block, and we can see that we break above it. That is a breaker structure. If we have a breaker structure and we have an order block here, that is the one we trust. Okay, same thing here. If we have a previous order block and then a creation of an order block, we trust this more because we have a previous breaker structure. So if we have one or two breaker structures, that is our structure in the market, that is our bias. We follow the structure and we only look for order blocks that are with a structure other than the one that are against the structure and against the trend. So you see this one, there is indeed a creation of an order block here, but is it valid? No. Why? Because it's against the structure. Same thing here, there is an order block here, but this order block is not going to be valid. It's going to be an engineer of liquidity, and then is going to be taken and creating a breaker structure above it instead of respecting it. So by applying those 4 rules, we will end up with high probability order blocks that we can make money off. The order block types. There are 2 types of order block that I focus on. Now, some people might disagree with what I'm teaching right now, and it's totally okay. We cannot all agree on something, right? But this is my understanding of order blocks after 5 years. This is what I focus on. You could look for something different, okay? And you are free to. You could follow your own way. If you want my way and if you want to test it, you can go ahead and test it. But this is my own way and this is my gift to you. So simply what I'm doing is providing you with something that I spent 5 years to solve, to put together. So this is my gift to you. We have 2 types here, and those are the 2 types that I only trade. I don't trade anything other than this. Now, sometimes what people would show you on some videos, now it might work sometimes, but it's all in hindsight, because you'll see that if you go back and do some backtesting, you'll see that it fails more than it works. What is that? That is, having a high here, having another high. They will look at this as an order block and it's going to get filled after maybe 1 month. How do I know it's that order block that I'm going to look for and not any other order block, maybe here, maybe here, maybe here? And I'm pretty sure that you've been through this. You had a lot of order blocks, and when you see people going over some backtesting on YouTube or showing some winning examples, you'll see that somehow, and it's not objective at all, they go and look for a specific one that has no specific rules, and they will say that this is the order block. But when you go and try it, you're not going to get the same results, and you'll be looking at a lot of failing order blocks, one here, one here, one here. That's why we need to focus on those 2 types if you want to follow my way. And believe me, no one is going to teach you this, but this is my gift to you again. The first type is going to be the immediate retest. Remember that a creation of an order block can happen in a minimum of 2 candles. And this is the one that we are going to be looking for. So you see, if we have a bearish candle and then a bullish one with the criteria that we discussed when it comes to identifying a high probability order blocks, that is an order block by itself. So this is just in 2 candles, the creation of an order block. It might be risky for you, yes. Sometime you will be looking for displacement above, then comes back to that order block, actually this one. But what you're gonna miss is displacement. You're gonna miss the displacement, and this is a lesson that I've been teaching people over and over. A lot of people say wait for the displacement to happen, but then what are you gonna enter off? And they always complain about when they enter, the price is ranging, because what they do, they enter after the displacement has happened, after the displacement is finished. However, we want to be part of the displacement. How is that? It's going to be by taking this risky entry, which is the immediate retest. We want to be part of the displacement and not participate in the market after the displacement is done. So we're going to be looking for a body closure above this one, maybe a liquidity sweep here, key level, maybe S&T, and then within the next candle, remember that only on the next candle we look for entry. If it goes up after, we're not interested, and we're going to be maybe going to the other type. But within the next candle, we need to see price coming to this order block and then going higher. And when we're talking about order block, we're gonna look for the body of the order block to be respected. You see this area here, actually from the wick to the body, that is the most important area and zone we look for longs. But if you want to enter on a very refined area, then this is going to be the one, the body. So we look for entry here at the next candle only. If it does not get hit or retested on the next candle, we're not interested. So if it does not get hit and retest on the next candle, we go to the other type. And this is going to be the liquidity engineering type. So in this type, we're not going to be having an immediate retest. However, we're going to be creating some liquidity around that order block in order to retest it later with the sweeping of liquidity also. So it's going to be 2-in-1, a retest of the order block as well as taking liquidity. And that confirms that the order block is going to be a high probability one. What's going to happen is, you see this candle here, confirming that we have an order block here. What's going to happen after is the next candle needs to be closing above this candle. That means it needs to be bullish. And that is going to, most of the time, create a fair value gap here. So we have a creation of a fair value gap here. And then we can maybe come to the fair value gap. And now we have two scenarios. The first one is coming to that fair value gap and just reacting of that fair value gap. And maybe if you trade based on fair value gaps, you could take that one. But if you are focusing on order blocks, and remember that we trust probability. So sometimes we're going to get trades of fair value gaps. Sometimes we can get trades of order blocks. Sometimes price will react of the fair value gap. Other times it's going to create some liquidity here around that order block and then come to that order block, sweeping all the liquidity, retest that order block, and then go higher. Usually, and there is no specific number of candles I want to see price, retesting that order block. But most of the time, a rough number would be 5 candles after the CISD creation. So after the change of state delivery, I want to see the retest within 5 candles. You see here, the change of state delivery happened at this candle. I want to see the retest of the order block after 5 candles. So you see 1, 2, 3, 4. This is within 4 candles. It is acceptable. We can take this one. If it takes more than 5 and let's say 10 or 15, I'm not interested. This order block becomes invalid. Invalid does not mean that it's not going to be respected. It means that based on my trading plan, I'm not interested in this one. It might work and it might not work, but I'm not interested in taking an entry after 10 or 20 candles. Those are going to be the 2 types of order blocks you need to focus on. Now, as price touch that order block, what are we going to do? We need an entry confirmation. And again, it's optional, but it's going to result in higher reward to risk and somehow higher win rate also, because you're looking for a confirmation. Now, depending on the confirmation, it could be higher win rate and it could be lower win rate. But most of the time, it's going to be higher in reward to risk because you're going to take a refined entry. Not all the time, but most of the time in general. For the lower time frame confirmation, we could be looking for change state delivery. So the same way we're looking for an order block here, and this is our higher time frame order block in the lower time frame. Let's assume that this is the body of the order block. As we come here, I want to see also another change state delivery. So another creation of an order block, or it could be the 3 candle pattern. And I've talked about this. Just look 3 candle pattern Mulham trading. You're going to see that video. So that's one option. Another option is waiting for a fair value gap. So as we touch that order block, I want to see a fair value gap created. I could look for an entry of that fair value gap. Another one could be the market session shift NPD array, and that is the 2022 mentorship model. So as we come to that order block, I want to see maybe a market session shift and then any other PD array. You could look at breakout blocks, fair value gap, or even order blocks. Or you could look at strength and weakness of candles. And maybe I'm planning to do a whole video about this because it's a strong and powerful concept. Simply by looking at the candles prior to the retest of the order block and after the retest of the order block. So let's say this is our order block. I want to see how price is approaching that order block and how it's coming out of that order block. And I want to see what happened in that area. It's really an advanced technique. This is the plan in the future. I mean, I've taught some people this concept and it is very powerful. And maybe in the examples, I will show some examples based on the strength and weakness of candles. And this is just a whole way of trading by itself. You could literally take trades based on the strength and weakness of candles without any other confluences. Now you could take a trade also with no confirmation, which means whenever we have the order block confirmation or creation, we look for just a limit order here at the order block, and that's it. So limit order at body of order block, and that's it. We enter from there, and we're going to be talking later about the stop loss and the take profit and when to go break even. Now all of this won't work if you don't use the right time frame alignment. Those are the time frames you need to use if you're looking for a lower time frame confirmation. So let's say you're looking at an order block that is at the 4-hour time frame. The time frame where you look for the confirmation now is going to be the 15 minutes. Now sometimes you could be flexible, going to 5 minutes, for example, sometimes 30 minutes, yes, but 15 minutes is the ideal one. If you're using the 1-hour time frame, it could be the 5-minute, 15-minute with a 1-minute time frame. Those are the time frame that you need to follow. You need to stick with those. Otherwise, you might get a confirmation that is not valid, and you might get some market such a shift that is not valid because you're going way lower in the time frame, that you're going to get a lot of market such a shift that are not valid. Now talking about the trade management, and trade management means where to place your stop loss, when to go break even, and when to take profit. All those things are very essential when it comes to your trading plan. Now for the stop loss, it's going to be, one option is below the order block, and especially if you enter with no confirmation, it's going to be below the order block. Sometimes if you're entering with a lower time frame confirmation, and you can see that there is enough manipulation and enough structure in order to create a strong low or a strong high. If we could identify that strong high and a strong low, we could put it below that one. So below a manipulation or a mitigation. Let's say we have a fair value gap that is fully filled and there is no reason for price to go lower and we are breaking above now. We could put a stop loss below that manipulation or again the filling of the fair value gap. When it comes to break even, and remember that all those things here, criteria for the stop loss, break even, and take profit, you could be flexible with this. So if you have already a trading plan and you have, even if you have a fixed reward to risk, you could stick with that one. So this is just a suggestion, and this is how I see the price action. For the break even, you could take some profit at the internal liquidity. So if you have fair value gaps on the way, make sure to take go break even. Actually, we're talking about break even here. You could go break even at those fair value gaps and internal liquidity, because there is potential for price reversing of any of those levels. And sometimes you could go break even at 50% of the range. That means if we have a range that is going like this and we enter here, you see the range from this low to the high, which is this one here. We could look at, go and break even at the 50% or the equilibrium of the range, or taking profit, same as go and break even at internal. If we have an internal that is very strong and it has an overlapping and it has a lot of confluences, we could take some profit there. And then at the external liquidity also. So if price disrespect all of the internal, now we're going at the external, we could take some profits at the external too. And sometime with the experience, you will know what is the right time. And it's not going to be always the perfect time, but the right time based on the probabilities on when to take profit. So putting all together, it's going to be 4 main steps here. The first one is going to be identifying the market structure and the bias. And this is going to be by, for example, watching this video. I'm not going to repeat all of the things that I already explained. And you see here, I explain daily bias with 5 methods in 54 minutes. So if I explain this again on this video, it's going to be an additional 54 minutes. And then also for the market structure, I have a market structure masterclass, and it is a full course on market structure that no one ever explained like this. This is a almost 43 minutes. So that's going to be another 43 minutes. That's almost 2 hours added to the video. So I cannot repeat all those tutorials again in one video, but make sure to watch those 2 videos. It's going to help you with identifying the bias as well as the market structure. Then we identify our order blocks, and this is going to be by looking at the 2 types and trying to develop that pattern recognition skill. So you could, based on your experience and based on the backtesting that you're going to do, you're going to be able to identify those order blocks And we're gonna also distinguish between the good ones and the bad ones, all by the pattern recognition skill. Then the third one is going to be the entry confirmation. We want to think about, is it valid to just enter with no confirmation here? Or is it better to look for a lower time frame confirmation? And then the last one, which is the trade management, we want to think about where to place our stop loss, when to go break even, and when to take profit, and all those things I explained in the previous slide. That is your complete order block strategy. This is all you need if you want to trade order blocks in a unique way. Maybe no one ever explained it this way. This is my own way. I'm not saying this is the only way that you need. You could actually trade order blocks in multiple ways. This is my own way. If it does not work with you, just move on and go try something else. But it works for me. This is how I see the market after years of experience. I'm not trading this for 2 days and coming to you and saying that this is how you trade, but this is from my 5 years of experience. Now I'm gonna go to trading view, show you some examples, put it all together in different time frames, show you how you can actually make money off order blocks. This is the part that you really need to pay attention, because maybe I'll mention some stuff that I did not mention in the previous presentation. So make sure to focus and maybe take some notes. Let's go over the examples. So let's start with gold on the 4-hour time frame. And the purpose of this part of the video is learn how to identify order blocks, or trying to identify order blocks together, because this is the first step of the trading plan. If we can see here, we can clearly see, if we start from here, we don't know if we are in uptrend or downtrend. This is all in hindsight. But again, you should watch the daily bias video so you know how to establish the bias. But without looking at the bias here, we're going to be looking at that pattern that we talked about. It's bearish candle engulfed by a bullish candle, or the opposite. If we can see here, actually at this candle, we can see that there is a bullish candle and then it was engulfed with a bearish candle. This is only if we start from here, creating this, or making this as an order block. You can see that immediately price comes to that order block. Maybe if there was enough confirmation or not enough confirmation, but then price rejected. But to be honest, it swept the high. So this might be a loss, or it might not be a trade by itself. But then what happened is another bullish candle, and then closing lower aggressively, creating what? Creating an order block that is right here. And remember, this is the candle of the order block. This is where the changes to delivery happen. Within those two candles, this is the candle that created that changes to delivery. If I get an entry within 5 candles, if you can see one, actually the second one gets into the order block. The order block would be the body of the candle. You can take it to the right. You can see that price comes here and then rejected lower. Now, I want to repeat this again, but I don't want to keep repeating things. But just to make sure that you guys understand this, this is not the only way to look at order blocks. There are different order blocks. Actually, if you can see this one here, this candle, it was engulfed within 3 candles. You see 1, 2, 3. For me, it is still an order block, but we need to focus on something that is specific. We need to focus on something that we can recognize easily, and we need something that we have specific rules for, and we trust the probabilities and we go with. So that's why I'm only looking for this type, which is an engulfing within 1 candle, or which is the engulfing within 1 candle and getting retest within 1 to 5 candles. In this case, we did not get fill or retest of the order block immediately. It took 2 candles, and you see we come here and then we reject lower. Now if we see here, we don't get an engulfing. There's no engulfing that I can see here. Now, okay, no engulfing. We go back in time here. You see this engulfing happened within 1 to 2 candles, actually 1 and 2. So 2 candles. This one here is a valid one. It's not a valid one in general. It's an order block by definition, the one that I give. You see, we get an engulfing within 1 candle and we get a retest immediately. Another one that is also valid is this one. But obviously we don't look for anyone, but this is also another order block, which is right here. You notice that when we are almost at the top of the range, a lot of the time price will take the low of the order block. That's why we still need to look for the market structure and the bias, and we look for the extreme one. Now a valid example that I can see clearly here is this one. You see how we sweep obviously in the maybe 1 hour. That is a structural liquidity, which I've talked about before. You can just look up my video about trading gold. So we get a sweep here, we reject until this level, and then we engulf this candle, creating this as what? An order block. You can see we get a retest and then flying immediately. That's one valid example of an order block, the way that I teach, okay? And you notice that it happens within one candle, the retest. Another one that we can see is also here. You see the old photo, the same rules that we talked about. What we can see here is that, you see this candle here? That is bearish. You see here, we sweep this low, then we engulf this candle and we go higher, creating this now as an order block. And we can see here that this is now the order block. We get a retest within two candles. We come here and then we reject higher. However, the same thing happened also here. What happened, and this is a proof that what I'm teaching you is working. You see, this now is also an order block. Why? Because we get, and this is the body of it, we get an engulfing after a bullish candle. And it was within one candle. And you see the precision here? Price literally come there and then reject. Now you see, that's an order block, right? What happened here is this bullish candle engulfed lower, creating what? Again, another order block. So that is also another order block till the body of the candle. And what happened is exactly on the next candle, we reject again, and then we go lower. Now what happened here is also the same. We give this bullish candle into the previous order block that is bearish, and then we reject lower aggressively. What happened here is we now create this as an order block. However, we don't get an entry here because this is first candle, second, third, and then you see it takes much more time to go there. However, this one here is also a valid order block, and it gets tested immediately within two candles, and then you make some money here. It might not be the highest reward to risk one, but it is indeed valid. And we're gonna look at one of those and try to look for all of the confluences that we talked about, and then we can go from there. But you see, all the time, you see this one here, actually we create an order block, but we don't get retest of this. This one here was a bit tricky because the engulfing was not much. I mean, for me, to be honest, this one I would not take because the engulfing, even though it worked, but I'm being honest here, I'm not gonna take this one because the engulfing and the body closure, it's not really obvious. If it was maybe around this level, I would take it. If it closes here, I would take the next candle to enter the order block. And you see what happened here? Same thing, body of the order block, exactly reacting from there. That's really, really high probability one. Now, if you also look here, you see we sweep a structural liquidity. We also sweep a previous candle low. Then we create this order block, creating what? This now as an order block. You see how it's been working? And I mean, in front of you, you can see that it is really high probability. Obviously, it's not going to work all the time. Obviously, there are some losses that you're going to have in this strategy, same as all of the other strategy. And sometimes also, you're going to miss trades. As an example, is this one here. Order block, but you miss the trade. There is no entry here. Also this one, when we are pushing higher with no retracement, you're not going to have trades. So I want to start with an example, like a full example, based on something that I did not take. So I did not take this trade, but I witnessed the whole formation of the order block as well as I tape read it. So I was seeing it happening real time, but I was not able for some reason to record. But you don't need to believe me. What you need to is go back to your chart and see this yourself and see if it is working, see how it worked. I start looking at TradingView around 1:30 New York time. This is the time, and usually about 2 a.m. So I come 30 minutes before to look at the chart. Obviously, what we see here in the dollar yen, so we can see that this is the Asian low. We swept Asian low here. You see how we did not displace below. Actually, we reject of that low immediately. And the next candle, this is what happened on next candle. Even though I can see that here, we actually broke structure to the upside. So there was a break of structure to the upside, then retracing lower. And the extreme low here was this one. So there was a potential of taking that low, but we decided to take this low here. And it's all based on what? Again, the strength and weakness of candles, as well as the closure versus rejection. Based on that rule here, we can see that we reject from this candle. That means we could have a reversal. That's what happened after. And not any reversal, but what happened exactly here is a creation of an order block. Obviously, this is last bearish candle before the bullish move here. This is the engulfing here. And at this candle, we can look for a retest of this order block and actually the body of it. So that is our order block here. I want to see next candle, either next candle to go to that order block or within 5 candles after the change of state delivery. What happened here is next candle immediately comes to this order block and goes higher. This is an extreme order block, and this also had a sweep of liquidity, and it almost engulfed this previous fair value gap, making this as an inverse fair value gap. But I would not take this. I don't really like it because the closure was not that big, right? We only closed just a small amount above and then we reject. So it was not the best confluence, but my best confluence here is the sweep of agent low. You see where we go lower here? This is all we retraced and then we started going higher. This is where you enter on the lower time frame if you wanted, or you could go and enter here based on the same time frame. Entry is going to be here, and I'm going to be discussing the lower time frame later. Stop loss maybe just below it, and then targeting this high. Now, what do you see happening after? This is our trend now. We are having this breaker structure. We might look for another breaker structure to the upside also. What do we notice happening after? And we're going to look at the lower time frame confirmation after, okay? But what we notice here is that we're going up. See this pullback. And at the beginning of the video, we talked about order blocks as pullbacks and the end of pullback. So you see here, this is pullback. The end of pullback is around this level. And this is the confirmation where the pullback is done and finished. This is now your order block. Now, in this case, it was not a retest at this same, in the next candle. But what happened is a creation of a fair value gap here. Now we want to count from this candle, how many candles did price come lower? If it is, after 5 candles, it's not going to be valid. And you see, actually, when we talk about liquidity here, this is liquidity level, as well as the low of the fair value gap in this case. That is also a liquidity level. It's internal liquidity. It's all engineered liquidity in order to go here. What happened after is this here. We come to this order block within how many candles? 1, 2, 3, and then the 4th one is there. So it is still valid. That is where we enter and we just push higher after. Now, same thing here, but we don't get, actually, we don't reach that level. This one is also not valid because the CISD happen in more than 1 candle. One that is bearish is valid here, but obviously we are in an uptrend and you see breaker structure to the upside. That is, the example is this one as an order block, but it was engulfed within 2 candles, so it's not the best one. But let's go to the lower time frame and see how we can actually capitalize on those ones, on those 2 order blocks, actually this one and this one, and how we could have take advantage of that one and make money. Now on the 1 minute time frame, this is your first order block. This is where it was confirmed. This is where we break above, and then we have a fair value gap here, okay? And then we retest to the order block around this level. All what we're waiting for, and this is different, right? So you could be looking for fair value gaps, you could be looking for any other confirmation or order block, but in this case, all I'm going to look for is a change of state delivery. And what we notice here is that we come to the order block and then we reject immediately to the upside. And you see here, actually at this candle, I'm not gonna look at this candle because honestly, or if I was looking for this trade, I'm not gonna consider this, and it's not considered a change of state delivery. So I'm not here to give you false information to show you that this is a high reward to risk, but the real change of state delivery and actually the real market section shift that happened is around this candle. So you see this candle actually broke the whole structure here to the upside. Could have entered based on this one, okay, or you could have waited for a fair value gap to be created, which is after this candle we get a fair value gap here. Could have also entered based on that one. Stop loss, you see this low here because we fill a fair value gap, and then we come also to this order block on the lower time frame. We could have put it below that low and then target the next high on the 15 minute, which is this one. That is 5 to 1. Now, same thing on the next one. This is your order block on the 15 minutes. And again, we're using what? 15 minutes to 1 minute. That is the time frame alignment. We come to that order block. We reject higher. That is not a valid change of state delivery. Actually, the valid one happen almost, yeah, we sweep the structural liquidity. We push higher. We engulf this candle. But I've entered from here. Obviously, if you enter based on fair value gaps, you're not in a trade in this case. However, you will be in other trades with also higher reward to risk. In this case, if you enter with a change of state delivery, targeting the next high to this one, only 2 to 1, but price actually reach much higher depending on the target that you're looking for. Obviously, you're not going to be targeting this high because no one can, but you could have taken around 5 to 1 or 4 to 1 based on the structure and based what you can see here. You see this previous London high could have created that one, and I think this was a 4-hour market makers consolidation, and it was the target. So you could have targeted that one. That is a 7 to 1 also. You see, this all happened today. The date is October 2nd. That is Wednesday in 2024. You could go to this date and check what happened. Now, if we think about order blocks, and on my videos about how to trade gold or 5 secrets to trade gold like a pro, I mentioned that order blocks works the best in gold. So even this specific strategy works the best on gold, but you can actually also look at some other pairs like euro dollar and pound dollar. However, you still need to have experience and you still need to apply the criteria that I give for high probability order blocks, because if you don't, you will fall into those invalid ones. As an example is this one here. That is invalid. Why? Because we did not sweep liquidity and we had a lot of, you see those low resist liquidity here. We're not taken. Price came here, then started going lower, then higher. So we did not take any liquidity from here, and we did not take liquidity also from here. So this is all invalid. However, we come here and we sweep this liquidity, then we start going lower. At that time, we could look for order blocks. Now, one simple tip, and it's part of the criteria that I give, is price going into point of interest. But if you consider fair value gaps, actually order blocks, and that is a tip that you want to look for. If we have a fair value gap and we get that reaction and that pattern, which is the creation of an order block, this now becomes a high probability order block because it's reacting of another key level, which in this case, if we be specific, it's going to be a fair value gap. What we can see here, this is also in a London kill zone. What happened is we break structure to the lower side, fair value gap. This is now a high probability fair value gap because we have a breakout structure after the fair value gap. It gets also mitigated on London kill zone. What we can see here is we get this bullish candle, then engulfing bearish. This now becomes an order block. And where is the order block? It is this one here. That is the candle. And you see what happened within 2 candles, which is 1, 2. We get the reaction. We could have entered here. What you could have done is enter here to close above the order block and target, this low here. This is only 1.7 to 1. And you could have gotten about 3 to 1 from this. This is no lower time frame confirmation, only same time frame. Now, what we can see here, we say this is invalid. If we just focus on ones that reacted off fair value gaps, actually there is, let me see. Okay, we get a reaction of fair value gap, but no engulfing within 1 candle. Actually, another one is here. See this fair value gap? I mean, if we look at this fair value gap first, we had this bearish move to the lower side, retracement, and a pullback into this fair value gap. Now, remember that it does not need to be always the extreme fair value gap. We get a reaction of this one, and we get what? The engulfing, the change of state delivery. Activating what? Or creating what? Creating this as an order block. That is what happened. You see, if you look for fair value gaps as a key level, it will always give you high probability order block. Another entry would be of this level. You see how you get a sniper entry, stop loss above the high, and then targeting whatever you want. See, price went up to 6 to 1. We're going to be looking at the lower time frame entry here. Also, we get another one. I mean, now we create this as an order block, but we don't get a retest after, or within 5 candles. But then we get this one where what happened here, is we don't sweep this low, but we sweep the structural liquidity, and then we create the order block. This is a good example. However, I'm not going to take it because it's out of kill zone, and I'll be honest, this is a bit confusing, which is not taking this high. But the moment you get the CSD, it confirms to you that there is a shift in the structure, right? So you could have also entered from this one here and stop loss above the order block, targeting maybe this low, and that is 3.6. Now, let me zoom in into the lower time frame and see how we can actually capitalize on this on the lower time frame using the replay. So for the first one, this is our order block here, and we have a fair value gap on the lower time frame. So price coming to that fair value gap is also another level to look for. You can see that price rejected. I'm not really rejected as of now, but then there is an indecisive candle. Then we started going lower. And here, what we can see is not an extreme order block, but this is a creation of an order block here. This is an order block, and the body of it is right here, because this is now most likely a shift in the market structure in the lower time frame, because it's a change of state delivery. Could have entered here and stop loss slightly above the high. That is the lower time frame. You could have also put it above this high, but I don't think it's good for reward to risk. So we can go slightly above the high here because we have a mitigation, and it creates this a lot of the time, especially for big structure, as a strong high. And we can target first of all this low here. That is a 4-1. If we play the price action, we also have fair value gap here. So if you switch to a fair value gap, 50% maybe here, then that is a 2.38. You could go to 15-minute time frame and see if you can look for another take profit. You can play the price action. I'm gonna go with the order block in this case. Order block here. You see, you get a very sniper entry here. You might not get in, then you get in after. In the price action, you can see immediately going lower, and it goes much more. I'm not sure if I'm gonna hold all of this, but a lot of the times I do, because if we displace below, I mean, the first one is no closure. We had a wick. The next candle actually displaces below. So it confirms to me that this is not a liquidity sweep, but a liquidity run. So we might actually go lower. And then, you take some profits when you get this CISD here. Or you go break even and then you trail your stop loss. For the next one, if we play the price action till here. So this is on the 15-minute. This is the creation of the order block, right? This is the moment we create the order block. And this is the body of the candle. Switching to 1-minute time frame to see what happened inside. This is what we get. You see, the CSD was what? A market structure shift in the lower time frame. See that we have this move to the lower side. Playing the price action, you see we displaced below this low, below some pullbacks, which is this one, as well as this one. And then we have this order block here. We have this liquidity level near the order block. A retest at the order block in the lower time frame. We still have no confirmation to go lower. We sweep another time, and then we have this change of state delivery. What I'm gonna do is enter at the change of state delivery. Stop loss, I'm not gonna put it above the high. You see there is another inducement here, a high that has a fair value gap. Maybe I'll put it slightly above here, or sometimes, yeah, I think I'll put it here. I'm not gonna put it obviously above the high because that's going to be the same as the same time frame entry, so it's not worth it. The reason why we're going to the lower time frame is to find a precise entry. So maybe I'll put it above this high, and then going for a 15-minute low, maybe this one, or maybe somewhere in here. Okay, it does not really matter as of now. Maybe 3-1. You could go 3-1 fixed reward to risk. Playing the price action, if you put your stop loss exactly above the high, it's going to give you a very small stop loss. Most of the time you're stopped out. If you do that, then that means you're looking for high reward to risk, which when you get stopped out, you could have entered again when you get another change of state delivery. Okay, for me, I was going with this stop loss because I know, and based on my experience, that there is an inducement here that might be taken. We got inducement, fair value gap, so that's why I put my stop loss above it in case if it wanted to sweep it, and it could have gone above my stop loss and I get stopped out, and sometimes it does. Okay, it's not always perfect at this, and it's not always lucky like this. Sometimes you need to be lucky in order to succeed in the market. So you see, we go lower. A lot of people would be targeting this low as our 15-minute, and you get that one. Very nice. And even if you put it also above the other inducement, there was another inducement here. you could have gotten a 4.5 to 1. That is a very nice one. Switching to 15-minute time frame, you could see that this actually, especially in gold, happen a lot of times. And order blocks can be in different ways. Okay, too many different ways. Actually, we have an order block here. This is not the perfect time for me, but we don't get a retest of that order block because we reacted of another fair value gap. But you can see this happening a lot of times when you take advantage of it and when you gain the experience to distinguish and differentiate between the high probability order blocks and the low probability order blocks. You will find success using this specific setup. I think I covered enough examples about the order blocks. It's not going to be the most beneficial things to go over more examples. However, the best thing for you to do now is practice. See if this works for you. See if it fits your psychology. See if you can use this in order to improve your trading plan and not totally switch to another strategy. So you could take some things of this video and take it as an experience. You don't need to fully switch to this one. You could use some of the things and optimize your main setup. If you guys like this video, make sure to leave a comment with some video suggestion if you have ones. Hit the like button and subscribe to the channel. Share the video with other friends if you think that is going to be beneficial to them. This is Mulham Trading, and I will see you next video. Bye bye.